Pale-Faced Warriors, how are you? Hope you're having a good day. S&P's got to my area yesterday, reversed. Russell really caved. So I think we're in that zone now. And what gives me even more confidence is Andre, who's going to be with us, just put out he's already up on a short DAX position here. So let's look at what he has here on the harmonics. Right here. This looks, yeah, this is Andre.
Hey, Coach. Good morning.
Hi, how are you, Steve?
As you said, Andre is going to be with us, so I'm sure he's going to show us, what he has in mind, what he's thinking. But I have to tell you that I do like it.
It doesn't look like a harmonic pattern, though.
I'm sure that, go to the next chart. He might have another chart.
Okay.
You don't need to close that. There is
looks like something, you and I would do.
Go to the next chart. Let's see.
How do you do that?
There's an arrow in the middle on the right. You can't see that much because of
this
slide, but
right there?
Yeah, click it.
Oh, that's harmonic.
Oh, there you go.
Okay. So, all right. So it looks like he's, looking for a completion of this harmonic pattern. I love his charts, don't you, Steve?
Yeah. They're very clean. He uses nice colors.
Yeah, that's what I love.
And I think it's very easy to read them, and they're pretty looking. I really appreciate that.
He's like a technical artist. I think
I think I couldn't have put it better than you just did. Yeah, he's a technical artist.
Yeah, I'm an artist too. You know what kind?
A love artist. I'm guessing you're telling me something like that.
Con artist.
Con artist? Nah, I don't believe that.
I remember talking to some friends of mine. They were artists. I said, "Oh yeah, guys, I'm an artist too," and they go, "Oh yeah, Dale, what kind?" I said, "Con." Anyway, here's the tail. Here's the tail that's been wagging the dog, right?
Yeah.
U.S. dollar won. Yeah.
And we warned about it. We warned about it yesterday, if you remember, that it looks like it's running out of steam. Yeah. And there is a clear momentum loss. And we had a daily close that was suspicious. I mean, like a shooting star, albeit white. And we're finally seeing some follow through. Now the question is,
will it break?
Because we have an area of support very close actually at 672. So the question is, are we going to break below that? If we do, I think then
I think we're going here if we do.
We're definitely looking for lower levels after that. I mean, and it's overdue. And don't forget, many people haven't perhaps realized how correlated this move higher of the USD Chinese yuan has been with the vast majority of the things that have been happening in the market recently.
Yeah.
So
this would be a good sign. This would be a great sign for gold to maybe get to 1250 or so if the yuan is going to travel down to 660-ish. So
it's definitely going to be a tailwind for metals. There's no question about it. I'm long since yesterday in copper. It's doing very, very well. So I'm happy with that. I really hope that we're going to see a deeper pullback in the USD yuan, and from a technical perspective, it looks likely. Unless we get in inflammatory language again from Trump, because I guess there is nobody that doubts.
Well, that happens every day.
Yeah, I know, but I mean, like upping the ante, because I guess there is nobody that doubts that this rapid depreciation of the yuan is a result of a retaliatory action from the Chinese, right? In a sense, they're like, you want to put tariffs? Fine, we're going to devalue enough for your tariffs not to mean anything.
Well, talking about upping the ante 43 minutes ago on the stream that you get on our platform, U.S. President Trump tweets U.S. was being nice on China until now.
Yeah, but something, those are empty words, right?
Yeah,
I
they
mean,
all are.
those were, I mean, those don't have content in the sense that that doesn't even hint to some specific kind of action. So I don't think that anybody cares about those kind of statements.
Okay. Hi guys. Hello, William, Pep, Diosthenes. How are you? Looks like you have one of your countrymen with you. Steve, I'm not sure how you're going to feel about it, but I have to talk about this. Okay, everyone knows about the tragedy that's happened with the fires close to your neighborhood, right?
It's in the suburbs of Attica, you know, a place that it has mostly summer houses, but as you understand, it's in the middle of the summer, so you know a lot of
Yeah,
people are living there at least during summertime, right?
yeah. Anyway, I'm in awe. Steve, you know how they show those commercials about guys in the armed services on a battlefield, they run towards danger? Well, you know, that's what Steve did to try and help people the other day. So, you know, like I said, trading is what we do. It's not who we are. And I'm in awe that he did it. You know, I probably would have been going in the opposite direction. So, you know, I commend you on your humanity, Steve. People never know how they're going to react in a situation like that, but it's very inspiring, and I'm glad to call you friend.
Yeah, thank you. No need to publicize that.
So to more trivial things like our wallets, so we have that happening there. I don't know what you think, Steve, but I think that what happened in the Russell yesterday kind of nailed, it's kind of like a nail in the coffin. The Russell led the way up, and you know, maybe it's going to lead the way down. Let's see if I could find it.
That was a huge bearish engulfing, by the way, yesterday.
Yeah. I mean, I went with it. I bought, you know, the bearish ETF because I can't handle the noise of stock index futures, and my pockets aren't as deep to be able to handle it. So I just went with.
Just type IWM on the top left.
Oh, I'm looking for the ETF I bought, which is a bearish
okay.
Russell.
Okay.
Three
Yeah,
times. Here it is. No,
they've made
that's
ETFs.
TZA. It's TZA. It's a symbol. Here it is. So what a nice
made ETFs for everything.
Yeah. So this was the 4-hour candle. Here's a daily. So we're all the way threatening this trend, which kind of looks like a wedge to me. And this really led the way yesterday. You know, I was waiting for your target for, I don't know, a month or so. But when I saw it yesterday, and one of the reasons I went for it is because I was looking for the S&Ps to top around 2820 to 30. So when I saw that and the Russell was already lower, I just went with it. But pretty negative. You would think that we at least have something down here in the days to come. You know, we could probably eke out another high in the next few days in some of these other indexes. Like NASDAQ, there's still some earnings coming out, and we did have a confirmed high up here on the daily. So, you know,
if you see there in the 1 hour chart that you're showing there in NASDAQ, you see there a nice evening star formation right at the top there. And, you know, if I was a short-term trader, which I'm not, but, you know, you can always read technical analysis, you know, on whatever kind of time frame you want. But I think that it's more than obvious that in the very, very short term, after seeing that, you know, strong move lower and seeing this consolidation that we're currently having, I think that at least one more leg lower from here to complete at least a very short-term correction looks extremely likely, right?
Yeah, and we're still higher on the week, so.
Oh yeah, absolutely. But you know, it's too early. I mean,
it's only once.
I mean, this can end up being a key reversal or whatever else. I mean, this can end up being a shooting star after pushing to new highs. In general, as I've told you, you know, we have every reason to be bullish, having to from a technical perspective. But on the other hand, you also have every reason to be very cautious.
Yeah. So be careful and hedge your pension plans, your IRAs, maybe move into some cash. I know that's, people that trade FX, most people, Steve, also have their conservative money, their retirement money. I mean, I don't think people spec with all their retirement money in FX or crypto or futures. That should only be the upper end of your pyramid, so be careful with the lower end of your pyramid now, because I think there'll be better buying opportunities down the road, maybe into October or something like that. But definitely this could end up being a turning point. My longer term objective, it's not like I'm calling for a crash, but why can't NASDAQ trade, the NASDAQ 100 trade 6,000 or lower in the next couple months?
I don't know about the next couple of 6 months or couple of months, but I can guarantee you one thing for sure, is that the Nasdaq is going to trade through 6,000 again at some point in the not so distant future.
And that would be like, I mean, compared to what we had from the elections, maybe it's 38% back. That's all. Just, could be a bull market correction.
Personally, I think that the longer the markets stay afloat, with whatever methods they stay afloat, and based on very, very flawed economies, the larger the crash is going to be when that one comes. I personally doubt it, that when they start really moving lower, that they're going to just pause after, let's say, 20 or 30% of the correction.
Okay.
So, there is, mathematically and statistically speaking, there is almost no chance that the next big move is not lower. That doesn't mean that it can't move higher first, but, the vast majority of the gains from the lows, we've already seen. There is no question about it. So, depends on what kind of a trader you are. If you're a day trader, none of that matters at all, right? None of that matters at all.
Nothing matters.
Yeah, but if you are a longer term trader, trying to be long here, it's like collecting pennies in front of the train, right, on the train tracks.
Yeah. So there's a gold. Looks like it's going to challenge these highs here. So even if it's a simple ABC, we should.
Silver is also attempting to break higher.
Yeah, silver acted better yesterday, and it's taking out these highs. So you and I were talking. We have 1580 as a possibility. So that's looking very viable now.
Yeah, 1575, 1570 to 58, 1580.
Yeah,
quite a nice resistance zone. We need to see it break above there to, to signal that something bigger is brewing, and that perhaps we've seen, all the weakness we were to see. But I'm still cautious. I mean, I liked the rebound of copper more, and then technically speaking, it was looking much better, and so far I'm I feel good about selecting that one, and I'm not looking to gain more exposure in metals for the time being. Although I have to say that even better than copper was palladium.
Yeah. You pointed that out yesterday. Yeah.
So ideally, the best would have been palladium, but palladium was not at such an obvious level or technical formation as copper was. So sometimes you just want to choose what looks better from a technical perspective. So anyhow, it ended up being the second best so far, so it's okay.
Well, we have a great interview. I had to cajole Tim to do it, but I just assumed he was going to do it. He sent me a tweet yesterday. Do we really have something scheduled? I said yes. It'll be fun. So you ever follow him? Slope of Hope, at Slope of Hope, Tim Knight.
What is there something specific in the agenda you're going to talk about, or all around conversation?
I kind of make my agenda the guest's agenda. So I always tell them, whatever is on your radar, I can go there. So I want them to, talk about what they're focused on, instead of, dragging them around to what I'm thinking about. I want their best thoughts, so I ask them what's on their radar. So we'll see.
Yeah. Anyhow, it's best for somebody to talk about what they have most conviction on.
Yeah.
Because, obviously somebody that's been a long time in the markets has a good feeling of, what is probably most likely to work and what's not. So, you'd rather hear somebody talk to you about what they feel good about than what you want to hear about, because it might happen that they don't have a clear opinion on that instrument at that given time. So, for example, as I've said before, if somebody, got me on an interview and, just demanded from me to give them an opinion on the USD yen, I wouldn't feel comfortable doing that. You know what I mean?
If I interviewed you, I would demand an answer and a direction in where Euro pound's going to go. Steve, I don't care about all your great ideas. I want you to tell me when, and you know what, maybe we are coming out of the range here. So I looked at it yesterday. I'm not sure where to commit to it. It almost looks like I thought about it again since you've been talking about it, Steve, and I just, here. It's either going to be real shallow here, but when I looked at it, I think it was, I had something all the way back down here at 88.20.
Don't worry. I'll show the Euro pound. I'll show the Euro pound. Bottom line, and I'll show it. We got a nice rejection from a confluence of resistances. Now the question is, where do we get from there? Was this a false break higher from the descending channel or not? And if I had to very briefly, but I'm going to show it. But if I had to briefly give a level, I would say that anything below 88.5 cents probably points to a false breakout. As long as we stay above it, there is a chance that this was just a pullback, a retest of the broken channel, and we might be moving higher from here. So we're going to know very, very, very soon, because we're getting there. I mean, we are at the point that the pair is now requested to prove if that was a valid move or an attempt to trap people in the wrong direction.
Okay. All right. Well, why don't you take over the screen? In my view,
Absolutely.
I think the two biggest events that we've had so far this week is the potential correction in USD1, which I think if it got down to 660, if you look at the weekly chart, that'd be a great area for some long positions, because I don't think it's over. I think it's just a wave that's going to correct, and then we get another wave, and that was one heck of a wave. So that and the potential turns in the stock indexes, I think, are the big stories of the week.
And let me say here, for those that haven't noticed, that we have the ECB. First of all, today we have new home sales, right? Which is quite important for the market, and because I bet a lot. We also have crude oil inventories. Let me not forget. It's quite important. The reason why new home sales are quite important is because there is a lot of speculation about how rates are gonna, damage first, perhaps the real estate market, right? So that's one thing to keep in mind. Then we have the ECB. And finally on Friday, which is going to be very important, because
the GDP.
We have very inflated expectations. We
4.8, I've heard a whisper number. 4.8.
I think it's expected to be. I mean, I think the average assumption is now something like 4.1, 4.2, something like that. Regardless, that's going to be a decently strong print. Personally, I have to tell you in advance. And I'm not sure if Stelios is still with us, because he had to attend something with, in the kindergarten with the kids. But he's going to be with us any moment now. Personally, I have to tell you that even if we get a 4.5 or even close to 5% print in the second quarter, I'm not going to be all that impressed, I have to tell you, because it's natural to see some kind of a strong quarterly print. Don't forget.
After the tax cuts?
Exactly, because don't forget, those are things that don't take effect immediately. I mean, they need some months to pass through the economy, right? So, I mean, as an after effects of the tax cuts, of promised increase government spending, etc., etc., it's seeing like a strong, quarterly growth. And don't forget that even during Obama and during the previous administrations, we always had some quarters that were like around 5%. The question is, do I think that the annual GDP growth is going to end up being something like to write home about? So do I believe that the US is going to get unstuck from roughly a 2.5% GDP growth on an annual basis? I seriously doubt it. I seriously doubt it.
Yeah.
So I know that the market, obviously, especially if we get like a 5 handle in the GDP, in the quarterly GDP, is going to go ecstatic in the short term. There's no question about it. The closer we print to like 4.5%, or even if it happens to be higher, the market is going to temporarily be ecstatic about it. If you look at the long-term picture, I don't think it changes much.
All right. Well, I think it'll be important then, buddy, for you to take a look at bonds and yields during your segment to look at potential scenarios going into what the market's expecting on GDP Friday, if you don't mind. Okay. And if you'd like, you could take the screen.
Absolutely. I'm doing it now. Stelios is with us, by the way.
Oh, hi, Stel.
Stel?
Hello, everybody. Hello.
Are you proud of your friend who runs towards danger?
Yeah, I'm very proud of him, always.
It's amazing, yeah.
So, Stelio, we were just talking about the GDP and expectations. I was saying that, in my opinion, even if we get like a strong GDP print for second quarter, to me, it's not going to make much of a change because we've seen several quarters in the past years. I mean, after the previous recession, we've seen several quarters that we had above 4% GDP growth. But what's bottom line is that at the end of the year, roughly, we always get something around 2.5% annual growth, which doesn't change much.
Yeah, and we have to remember what the market's pricing in. I was just looking at Fed Fund futures a few minutes ago, and the market's still pricing in almost 2 hikes for this year, like 41 basis points, I think, or something like that, and another nearly 2 hikes for next year. So, we always have to realize that this is the hurdle rate that the Fed has to keep going with for the markets not to get disappointed. So do we think they're going to hike more than that? I personally find it a little bit difficult for them to hike. Okay, twice this year, maybe they will, but going the year after, I don't know. I think the market's actually pricing it in correctly, what's priced in for the rest of this year and the next year. But I still think that the surprise will be to the downside. Just my.
Let's
Stel, I would have agreed with you on that, and I still think it's possible. But it's almost like Powell has to almost assert himself after President Trump's statement about he's a lower interest rate guy, and he doesn't like that rates are going up. So for the Fed to show or attempt to show independence, political independence from the administration, I think it almost forces Powell's hand to demonstrate that.
Well, I'm in total agreement with you, Dale. And that's why I think that, once again, Trump proves that he has, he's too fast to speak, you know what I mean? And that does him no good because, as you very well said, do you think that the Fed this year, last year, in the past, is not being affected by political decisions? It always is.
Always.
Do you believe that the president doesn't?
But they could do it under the cover of the president saying nothing.
Exactly. Don't you believe that the president has always an open line to whoever is the head of the Fed, and telling him, listen, I need you to help me out here because that and that and that. Obviously, I mean, we've seen a lot of decisions from central banks all over the globe that point clearly to the fact that there is no real independence of the monetary authorities, right? The question now here is the following. When you openly state that you would like something different to happen, don't you in essence force the other person not to be able to help you? Because as you very well said, you put now Powell in the following in the following very, very tough situation. Let's assume that Powell agrees with you, and Powell wouldn't want to keep hiking. Now you put him in the situation that he might actually consider being a little bit more hawkish, because if he wants to reverse course for a good reason, he's going to immediately be thinking, now everybody's going to think that I'm doing it because Trump requested openly so, right?
We have to remember though, the day after, I think it was the day after that Mnuchin or whatever his name is, he actually took it all back. He said, no, it's not what he meant and all that. So I think net is as if Trump has said nothing. And we all know that
that's not the case, Dale, because I mean, okay, if I came out and I said that Trump didn't mean it, does it matter? Of course, you'll tell me, but I'm not the head of the Treasury. But the question is the following. Does the statement that Trump made can be interpreted in multiple ways? I mean, it was stated in simple English, right?
Yeah. No, I agree with that.
So no matter what Mnuchin says, it looks like somebody that is trying to correct an error, but definitely doesn't fool the market that Trump meant what he said, right? I mean, we all understand that he did. And to be fair, to be fair and square here, I kind of agree with Trump as well. In what sense? Now, the thing is the following here, and the big conundrum is the following here. I agree, having to do with his economic theories, I mean, his approach to the economy, I agree with a lot of things that candidate Trump was saying, and I disagree with almost everything that President Trump is saying. So candidate Trump was saying a lot of hard truths, a lot of them. And then he comes in power, and instead, now that people have actually voted for him, theoretically speaking, based on what he was saying as a candidate, so he has an easy way out of affirming what he said, and so in essence, taking himself out of the equation, having to do with future blame of how the economy is going to end up. And what is he doing? He's doing the exact opposite. Within 1 year, he's trying to claim that this is the best economy that the US has had ever, or in several decades, or some kind of statements like that. So he's saying that. So he's taking credit of the current economy. He was saying that the economy was ailing under Obama. He was right, by the way. But now the economy is booming, and it's all due to him. Nobody, of course, is a magician and can do that in 1 year. But even if we assume that's right, he has now trapped himself, because by claiming victory, when
he's linking himself with the economy, right?
Yes, exactly. When things go south, now you've lost the card, guys. I warned you. That was a bad economy. I inherited it from somebody else, and of course, it happened. What happened? It was due to what the previous ones were doing, which is true, by the way. I'm repeating again, it's true. But now he's lost the ability to play that card, because he wants to claim, glory for the short-term, in quotes, victory, right? So that's a huge mistake, in my opinion, and it's a huge mistake that he's going to pay gravely for it. I'm 100% sure about that, because statistically speaking, the chances that he's not going to have a recession in his hands as long as he's president are very, very low, in my opinion. Very low. Very low. So I think that he has made a huge mistake here. And, I don't know what the repercussions of that's going to be, but definitely, we're going to be here to find out. Regardless, the contradiction here is the following. He's claiming that the US currently has one of the best economies it ever did, but at the same time, he wants to persuade us that the US economy cannot handle much more than 2% interest rates. How the hell do those things go together? I mean, how does the strongest economy can't afford more than 2% interest rates, when we know that in the past we had indeed periods of strong economic growth in the US that was doing fine with 4 and 3 and 5 and 6% interest rates, right?
And this is after 10 years of extremely loose policy and quantitative easing and all that. So you're right. We're coming back to the new normal. I don't think rates will ever go back to 10% or whatever they used to be, or 5, 6, 7, 8, 10%. But you're right. 2% rates is hardly high for a strong economy. So you're right.
I mean, if you consider, say, 2% interest rates a few years back were considered extremely loose monetary conditions, like unprecedented, right?
Yeah.
So
exactly.
Pre 2008, that was considered like
emergency rates, right? Emergency measures.
Rates. Yeah. Exactly. Yeah.
Okay. Before we continue, I wanted to note 3 little things for people who might have missed them. One is quite funny, actually not funny, but Venezuela has officially hit 1 million% inflation this year.
1 million inflation rate. Yeah. I mean, it's not to laugh about, but you just try to grasp that number, and it's out of this world.
It's literally, you ask yourself, shall I go to the supermarket today or tomorrow? And if you spend one more day, it's 10% extra. So it's amazing. So that was one thing. Then we have the meeting between President Trump and Juncker of the EU. And Trump has been very vocal on Twitter. For people who have missed it, he's been talking about the tariffs, and he actually said something in his last tweet, which I actually agree with. He says, and I quote, "I have an idea for them. Both the US and EU drop all tariffs, barriers, and subsidies. That would be finally called the free market and fair trade." Which, he's actually right on that. But whether this is something doable, it's a very different story. And he said, I hope we do it. We are ready, but they probably are not. So that's the main event of today, and I think it's quite soon, actually, time-wise. And the other thing which was interesting to note is that in the UK, first of all, we had a couple of nice numbers today in the UK. We had mortgage approvals and the CBI distributed trade survey, which beat quite big. But the interesting thing was that
we haven't seen any real reaction from the pound so far today.
No. But the interesting thing was that they voted yesterday to give a pay rise, the biggest pay rise in 10 years for 1 million public sector workers in the UK. There used to be a cap of 1%, I think. Yeah, I think it was 1%, and they basically scrapped that. Now, and they're going to give like 3 or 3.5% raises.
It's funny, but at the same time that Venezuela becomes another extreme example of where socialism leads, there are so many Western countries that are attempting to go full tilt socialism mode.
Yeah.
Guys, it also builds a case for, besides, the traditional hedge against currency problems, gold and silver, why a lot of these countries, people are gravitating towards crypto.
Yeah, I mean, they can't actually access. That's the thing, some people in such countries, they can probably find it easier to access cryptos,
right,
perversely, rather than so, their hands on gold or on silver or whatever.
Or dollars.
Or dollars, yeah. Exactly.
So so as we have these rolling currency crises, the case builds for the people who become unbanked, for, crypto offers them a haven. No matter the price, with that kind of inflation, even if they paid 18,000 for 1 Bitcoin, they're better off with that being down 70% than if they just held their currency.
Yeah, that's true. The only problem
is stronger, isn't it? Huh?
Yeah. I think that's very true. I think the only problem is that eventually, when governments see that there is this parallel thing that people can use to store their money and to stop losing on currencies, on inflation, they're going to do something about it. That's my opinion. They're going to say, we're going to make it, they're going to put barriers. Yeah, they're going to put barriers.
Until they have their own.
Yeah, exactly. I don't think the governments, the problem is the governments will always win. That's a point, for decades, centuries now, the governments always win. So they're going to find a way to control things. I hope I'm wrong, but it's just the way history has been repeating itself for years and years.
You're like Aristotle to me, man.
Yeah, I wish.
He's like Plato.
So we have a friend. I'm just going to go through a few things. And
I'm Albert Einstein.
That's it. You look a little bit. No, I'm kidding. If you leave a little bit of long hair, you never know. By the way, we don't have many things to show today having to do with charts from a basic technical perspective, and I'll explain why. because since yesterday we've had very, very few things moving, but we have Andre with us. So I'm going to go through a few charts fast because not much has moved. And then I'm going to pass it to Andre because I'm pretty sure we haven't had his point of view from a harmonics standpoint. So I'm pretty sure he has something to show. We know for sure that he has an opinion on the DAX because he established the pattern in play, and I'm sure he has more things to show. So we have a friend asking
Steve, before you do that, I'm just going to answer to our friend Sandrine, who's asking about this thing about what I talked about, 3 to 3.5% increase for public sector workers. I'm putting the link to that on the chat, so it's a link from the BBC website, which describes all that for you to have a look.
Thanks.
Okay, thanks, Steve.
So he asked about here why yen. It's more than obvious that we have some kind of a triangle here, so the chances of a continuation lower, especially with confirmed lows in the RSI, is extremely high. So, you know, if we break above this trend line, fine, we might see a bigger rebound, but I would still need to see a move above 24.5 to confirm. But as long as that doesn't happen, I think that, you know, more or less you're forced to be looking lower. So in my opinion, not the time to fade this, not unless this breaks to the upside, and still you would need to do it very cautiously. Now, let's go to the basics, which is a euro pound that we were talking about before, coach. Here it is. So we had the rejection from this confluence. It's a triple confluence of resistances, actually. Why? Because we had an ascending channel. We hit that. We had the 50% fib of this move from the highs to the lows that we saw in April. That was exactly there as well. And this was also horizontal level of resistance, as you can see. I mean, we tested that multiple times as a resistance. So nice rejection from there. Now the question is what happens from here? As I said, as long as we trade above 88.60 roughly, you know, this might simply be a pullback and we might see like another move to the upside, in which case we're going to confirm that this was some kind of a significant break. But if we fall down, if we fall lower below 88.60, I think that, you know, this is just going to prove to be like a false break higher from this descending channel. So you know, we're either moving lower from there or we just remain stuck, you know, for who knows how long again, within a general range that we see that we've been trading in. Okay, so regardless, we're going to know soon, right? It's more than obvious that we're going to know very soon. Euro USD still struggling, hasn't managed. I mean, it's been so many days that it's striving to penetrate through this descending trend line resistance. It keeps failing, you know, one day after the next. Cable rebounding somewhat from the 130 area, but as I've said, unless it breaks above 133, I don't really see something to write home about here. I mean, it doesn't inspire, you know, doing something with it, in my opinion, because it's quite dangerous. USD yen currently testing some ascending trend line support. So what's this area? It's roughly at 111. I think that if we break lower from there, we can see some acceleration to the downside. But as I said, I think that USD yen is a very, very bad pair to track. I mean, correlations have broken down. It's heavily manipulated. I think there are better opportunities out there at the moment. I'm not going to talk about the DAX because, you know, Andrei is going to do that for us. As we said yesterday, a very nice attempt of a reversal here from the Nasdaq. I mean, it was moving higher and we ended up with a shooting star. So it was a false break higher from this confluence of resistances that we had roughly at 7,435. So, you know, I'm still very cautious having to do with the risk assets. As we said, metals seem to be behaving very nicely. Here is silver trying to break above this descending wedge, but still, as I said, 1575, quite an important area of resistance. So, you know, I wouldn't be very enthusiastic as long as we stay below it. Same deal with gold, meaning that, yeah, we can get a bigger rebound from there, but I would want to see what's going to happen at 1245 unless we break above it, and then 1260. You know, it's very hard to make a bullish scenario here. I mean, it looks more like a little rebound because, you know, nothing moves in a straight line. So I would remain cautious. Copper, though, is doing very nicely. So copper feels like, you know, it has more upside. Ideally, my target is seeing it back at 294, which was the breakdown level of this double top, in which case I would want to book my profits if we make it there.
Nice call, Steve.
Yeah, thank you. I'm already like 1.5% in the money. So I already feel comfortable. I mean, at least I'm going to make sure that there's no chance I'm going. I'm getting out of this trade with a loss.
Copper is constructive for your account right now.
Yeah, absolutely. Yeah, there's no question about it. Crude still consolidating, and as I said yesterday, as long as it's consolidating, it looks to me like most likely it's going to produce at least one more move to the downside. So I wouldn't be trying to fade this weakness yet, although I remain bullish in the medium to longer term from a technical perspective. In the short term, it looks to me like another leg of weakness is quite likely. So as you see, the vast majority of the assets has moved. I want to also show the cross rates because I haven't done so yesterday and the day before yesterday, and then I'm passing it to Andre. So Euro-Aussie still trapped within, you can call it triangle, you can call it a range, but definitely we have a very well-defined support and resistance. 157 is support, 159 is resistance. I would say that whichever of those two breaks should produce some kind of an extended move. So, people that like this kind of trading, probably buying or selling a breakout is not a bad proposition. Euro Kiwi, something equivalent. Instead of being in a range, it's more or less in a pennant. This looks to me like it can potentially break to the upside, but regardless, a move below 171 is going to invalidate that and might open, the downside for another move towards the 166 area. So this range is tightening. There's nothing to do with either of those two yet, but they're good candidates to trade them as breakouts. That's why I'm showing them, okay? Because there are people that like to trade such breakouts, and in this case, I think they should be aware of these patterns. Pound Aussie, some kind of a corrective move lower. This looks very corrective, though. I mean, I'm quite convinced that it's corrective. I mean, so far the price action has been choppy, has been overlapping, has been slow. We are still finding support here at 176. So I would still consider the likelihood of another push to the upside, as decently high. And here is Pound Kiwi, and then I'm passing it to Andre. Pound Kiwi, very choppy in the middle of a symmetrical triangle. So I don't expect that Pound Kiwi is going to imminently do something because, as I said, I see here a triangle. We're in the middle of it. But, I showed the rest, so I want to show what I'm seeing here as well. So let me now find Andre and see what he has to say. There he is. I'm making you, Andre, a panelist. I'm muting you. I'm passing you the screen, and I'm very much looking forward to hear what you have to say. Hello, mate.
Hello, everyone. Welcome, and thank you, Steve. Let me try to.
Did you get the screen? I think I passed it.
Try. Can you? It's.
We can see you. We can see you. Yeah, okay. Yeah. Use the yuan.
Yeah.
That's what we see.
Yeah.
And
this is
nice. Nice that you're starting because we were looking for some confirmation here. I was showing yesterday that the day before yesterday we got a nice signal that perhaps it's about to reverse lower. But that's why. And for people that don't know, ForexAnalytix is the platform that actually gives you multiple types of analysis. And the reason we do that is that we believe that when opinions confluence, there is a higher chance of something is happening. And
absolutely.
Since USD yuan has been detrimental in and extremely crucial to the market movements we've been lately seeing, I would really want to see what you're looking at from a harmonious perspective.
I've mentioned it before. Actually, we were discussing this chart previously, and I shared that cipher before the formation, before the completion point being reached, 78%. I believe you remember that. So we are now facing a nice bearish candle, which can search for a 38% retracement. But
so what's your target?
The minimum. It's
conservative
always,
target.
It's always a 38% retracement, but we have always. I like to consider the close price of the previous structural resistance or support level. So if I have a resistance, let me try to give you a number. No.
Yeah.
Yeah. So it's something around. It's the previous structure resistance zone.
666.
Yeah.
What I see there. Eh? Okay.
It's the close price of the resistance. No, the zone, the previous resistance zone, which can act as a support. So let's say between that, there's a window between that close price and the 38% retracement. So let's draw something like this. Obviously, imagine a situation where the price trends a few points above, and if you need to make some adjustments at your Fibonacci levels. So
yeah, if it moves a little bit above, then the 38.2 might come closer, actually. Yeah.
Yeah, it will invalidate as a perfect cipher pattern, but it will not invalidate the eventual pullback. So we need to adjust our Fibonacci levels in order to get synced with new targets if somehow we are facing or we are engaging that pattern. So I just want to share that one because I found interesting that cipher formation. I don't trade that instruments, but I found interesting to share with you that.
Okay,
that
so
you're
also looking for more downside. I know that you have an active pattern in play in the DAX. So tell me exactly what I mean. We had a nice injection, to be honest, from the 61.8 and the 200 DMA. But other than that, from a harmonics perspective, what are you looking at?
Not in a harmonics perspective. I have that daily chart published before. So let me try to push that chart again. It's still possible to form to force this bat pattern below 1187. As Dale mentioned before also, so it's still possible. From here, I was for those who are following ForexAnalytix, you can check the details on those charts. But I was expecting that pullback. At least we are facing a double bottom here. I was expecting somehow a retest of the previous supports. We have the 200 media average above. So at this point, I was expecting, okay, if somehow they break this level, it's a previous neck zone from the previous double bottom. If somehow they reject to trade to still below that previous resistance, it's a support. And if somehow they reject to trade below, they will search for the 200 media average. And what they have done, it's exactly that. And they searched for the 200 media average above 61.8 is the golden ratio, and it's a double top.
I see that you have a pattern there that is targeting. Yes. What's the level it's targeting actually?
The pattern, it's something between 1263, 1267.
No, your target, 12,200.
Oh, yes. My target it's based on price structure and not any other indicators. So I trade based on the previous close from the most recent structure support. So this is the support zone, the most recent one. I will search for in that specific time frame, in the time frame that I'm trading. I will search for that close price. And I will set my first initial target there. By default, we are facing a bearish 2618 trade setup. So by default, and it's not the first time, we have other situations where the market already provide us this trade setup here inside the ForexAnalytix. So it will search for, eventually it will search for a symmetrical behavior.
I see that you're looking at there what we would call in Elliott wave an ABC, and what you call in harmonics an ABCD, right?
It's an X below.
Yeah.
It's an X, A, B, actually X, A, B, C, D. No, we have, because we need to consider this double top and the pullback here as a potential harmonic ratio, because at 88% retracement below, we have the default bat pattern that I show here, so that we have here. So this gray bat pattern at 88% retracement, but we have this this pullback here, retesting the broken neck. So this, if this act as a three-wave structure, it will form a symmetrical three-wave structure. We can call it as an ABCD pattern.
Okay.
Correct me if I'm wrong, Steve, because I believe you are more familiar with this. But an ABCD pattern is a pattern that's usually searches for trend continuation. So if somehow we are trading in a bearish momentum, eventually we will face a
reversal
pullback.
high. Yeah,
exactly. So
yes,
that said,
yes.
I will not be surprised to see that. But what we are trading is a bearish 2618, is a double top followed by the 618 pullback. Okay, nothing more than that. Yeah.
What else? So you're looking for a deeper pullback in the USD yuan. We agree. A pullback in the DAX. I agree that as long as it stays below that confluence of resistances,
yeah,
you know, it looks quite likely.
And
but
that's
what,
why
else,
we set our stops. We set our stops, just to finish, Steve. We set our stops right above the 618, the golden ratio, because we know that if somehow they start to trend above, it will increase the probability at least to trade to even higher. So I will not be surprised with that. So we are now facing in dollar versus yen. We are now facing the shark territory. It's a bullish pattern territory. We are facing the previous structural resistance. I'm trying to change that into a friendly time frame.
Yeah,
so
I was also showing that it's currently testing an ascending trend line support. So might see a reaction here.
Yeah, let's see. I'm not very comfortable with yen at this moment.
Me too, because in the short term,
we have a lot. We have a lot of.
The last 5 days of price action looks more like a consolidation to me. So I wouldn't be surprised if it resumes to the downside.
Exactly, and that's what I was expecting. We actually I've published all those yen instruments inside ForexAnalytix. So for those who are interested to trade the yen pair, so most of them completed an harmonic pattern, and well, it's a lot of situations to trade on those yen. It's not usual to find confluence between momentums and patterns and completed patterns. What I mean is, if I find a euro versus yen situation to trade, it's not granted that I will find the same or a similar trade on Aussie versus yen or New Zealand versus yen or even cable versus yen. So. But it's interesting because recently this major momentum, this bearish momentum, was shared among all those instruments with the completion points of one harmonic. Just for you to understand this, if you go into the forexanalytix.com and if you search for Aussie versus yen, you will see the development of those behaviors. So at this point, this is a 4 hours time frame. We were trading at 81.99, and I was expecting the market to print me this 83.76 bearish bat pattern, and the market has filled that criteria. So the market extended at that level, printed the bat pattern, and it's now trading lower. So at this point, we are now facing the 38% retracement from this bullish momentum. We are trading below. It was
understood, but
support.
Since you're showing the Aussie yen, the Aussie yen, and the Aussie yen has been trapped since roughly February in like a wide range, roughly 80.50 to 84.50.
Yeah.
Looking at the bigger picture, what is the direction you would be looking for this, let's say, wide consolidation to get resolved? I mean, higher or lower?
Well, I need to follow the default Elliott wave behaviors. No, Steve, I'm expecting a deeper pullback on yen pairs. So I believe this is just one part of a consolidation above. So it has started to print a new bearish momentum. It's now entering a new consolidation process, and I need to trade below those levels. And actually, let me delete all these charts, because we have here these two highs can at least for me it can indicate me the next level they will find as a support. Let me try to get my Fibonacci extension.
Don't worry.
Hey, Steve,
Yeah.
just in case you missed it, Canada got your 131 target.
Let's see.
See, I know all your trades.
Yeah, so on our way to 130 in my opinion. I mean, it looks
Okay.
good. Nice.
All right,
Nice.
I'll let you know.
On our way to 130. Thank you. Thank you. It looks good.
Good call.
Did you use the drag candle method that you were showing us yesterday? Coach?
Yeah, I put a magnet on it. Magnet.
Okay, thank you. Keep pulling, please.
I
Keep
will.
pulling.
My arm's tired.
And Steve, because you have mentioned CAD, it's an interesting chart also. Not completed yet. We have these.
Nice, because I'm looking for 130.
Yeah, 130, 128. It's actually we have a symmetrical behavior, three-wave symmetrical behavior pointing 129. So it's extremely possible. It's a previous resistance zone also. So I believe it will fill your idea also. Let me push that copper trade that you are in. So because actually we have, I'm not sure if you have the same default targets. Let me just push this into a weekly.
294. I'm looking at the retest of the double. I'm looking at the retest of the double top range. Both, I mean, range is support. Perhaps will act as a resistance this time, which is at 294.
Okay, I have the 38% retracement at 291. Yeah, 294, the previous structural support. Yeah, it's extremely, it's possible, obviously. Yeah, I was expecting at this point, it's the shark pattern formation. It's a reversal fib level. It's a 161.8 extension. And the price has found support there. But at this point, I was expecting, and based on what we have on MACD and RSI, I was expecting a few more oversold conditions, at least extremely oversold conditions. So at this point, I was expecting the price to search for this 200 media average below, completing at the same zone for the completion point for the harmonic.
I was also looking for the completion of the double top at 256 initially, but after seeing that, there is a descending wedge that has developed and we're breaking higher, and I was looking to gain some long exposure in the metals, I was like, what the hell? Let's jump on it. I mean, it looks good.
Yeah, let me say, and I believe you have an interview, Dale.
Yeah, he does.
We have 2 minutes, I believe. Let me just push your euro versus cable. Also very interesting chart here.
Let's see from your perspective, what do you think is happening? It's breaking higher, or it's about
I need it lower. So I need it lower. So
I also need $1 million. That doesn't mean
it's not far away from my default target. It's 20 points above the default target.
Yeah, but wait a second. You believe it's going to go lower before?
Oh yes, but I believe it will go lower. So and it eventually has started at this point. So we are now facing it's a shark pattern at 224 extension. It can act as a reversal, and we are actually, as we can see, the market has rejected this head and shoulder projection above. So we are trading also the head and shoulder projection. So the market has achieved has reached the default projection for that pattern, completing a 224 extension, the shark pattern, rejecting to trade for now. It's rejecting to trade low above that level. Initial targets, obviously the 38% retracement, searching for the 200 media average acting as support. But I truly believe on a higher time frame we will see euro versus cable trading lower, and eventually it has started at this point. I don't believe it will break this previous major resistance here, and I can be wrong, obviously, but based on what I see, I truly believe that we will trade even lower.
89
yeah.
cents there is a,
Oh
is
yeah,
a very strong area of resistance. Question about it. Yeah, I agree with you.
Let's see. And well, stay tuned for those charts. A lot of those projections.
Thank you very much, Andre.
Projections had worked. So.
And you can join us on Thursday again if you have
of course,
more things
of
to talk
course,
about that.
of course.
Perfect.
Of course.
Okay, my friend.
Thank you, Andre.
Okay, coach. Enjoy the interview.
Thank you, Steve. Hello, Tim Knight. I'm going to make you the presenter, Tim. Really appreciate you granting this interview. Look, I've been to your website. Excellent website. You're a believer in communities. So looking forward to hearing your voice. And
this is my voice, if you can hear it.
Hey, Tim, how are you? Great to meet you.
Good morning. How are you?
Good. I really appreciate
Where are you? I'm wondering. Where are you located?
Where do I live?
Yeah, where are you?
Temecula, California.
Oh, good Lord, we're not that far apart. Okay.
Okay, you in Southern Cal too?
No. Up in beautiful Palo Alto. A little dark.
Oh, okay. You're up there with all the techies.
Yep.
So,
yep.
Yeah, I read a little bit about you. You actually had a service that TD Ameritrade bought. So, wow, that was a big victory in your career. Go ahead.
That was my company, Profit.
Right.
PROPHET. I sold that back in 2005.
Nice. So how did you get into the racket, Tim? Did you know when you were 18 years old you were going to be doing this later in life?
Well, I definitely was making tiptoes in that direction. I'm very visual. I've always been a very visual person. I can't draw even a stick figure, but I love looking at things. And I guess the exemplar of that is I'm terrible with names, but I'm really, really good with the faces. But I have always been interested in business, financial markets, even though I definitely didn't grow up in a place that had anything to do with any of that, nor was any of my family involved in that. But I was drawn to charts naturally, and placed my first trade on Black Monday in 1987, and I've been struggling ever since.
Interesting. So that day was your first trade. That is really.
Yeah, I should have known.
Cool.
That was my sign.
Huh? Well, they say, I learned on the floor, they said, actually, if your first trade is a winner, it's bad luck.
Okay, well, then I must be the luckiest person in the world.
Yeah, there you go. Okay, because then people think it's easy. So why don't you tell us a little bit about who influenced you, or are you completely self-taught, or did you have mentors early on, and how did you gravitate to the type of technical work that you do?
Well, didn't have mentors or anything like that. No, I definitely self-taught, and read. I guess the first book I ever read related to this was Jake Weinstein's How to Profit in Bull and Bear Markets, and that was before that first trade I mentioned. And
was that Stan Weinstein?
Oh, I beg your pardon. Yes, I'm conflating names.
Okay.
Stan Weinstein,
all right.
Yeah.
Okay.
And
I remember him.
How to Profit in Bull and Bear Markets, and it's a very simple introduction to technical analysis and charting. And like I say, it was really love at first sight. I have not probably spent a single day since those many decades ago not doing something with charting, but I didn't have any particular teacher or anything like that. The closest I got to an inspiration was a video that pretty much all of us have seen, which is The Trader, 1987 documentary on Paul Tudor Jones.
Oh, okay.
Which was just, to me, mesmerizing.
Yeah, well, he says all the big money is made at the turn. So let me ask you this, your handle, Slope of Hope.
Yeah.
How'd you come up with it, and what what's the deep meaning in there?
Sure. Well, there's a lot of aphorisms and sayings in the world of trading, and one of them, a common one, is markets climb a wall of worry and slide down a slope of hope. And besides being visual, I'm convinced my mother was accosted by a bear on a camping trip, because I've got a lot of bear blood running through my veins, and I tend to greatly prefer shorting and bear markets, which means 2008 I was the king of the world, and I've been weeping to the heavens ever since. But it's I love short setups, and I just find. I mean, I find charting fascinating, but history, which is another interest of mine, I find inextricably linked to these wiggles that we look at on the screen. And so those turns that Paul Tudor Jones you mentioned, I'm always interested in those big shifts in history.
Okay. Yeah, so I'm predisposed as well. Learned that down is faster, gravity. And I've spent some time top picking indexes over the years too. So what's on your radar now, Tim? Are there any sectors, or do you mainly cover individual issues or ETFs in your community and with your newsletter? Are there any things that you're kind of drilling down on here? I actually think that we're putting in some type of high here and we get a shakeout where we might even be able to take out the Feb lows and then have another launch from there. So,
well, since we're looking at my screen, may I pull up a chart?
Oh, sure.
Oh, okay. And this is just to say, and quite obviously, this is my website that I've been building for years now, and a big focal point of it is what I call slope charts. I had mentioned selling profit years and years ago, and the charting platform that I created has been in the course of going away for a couple of years now, and I just panicked and I decided, well, I'm just going to do it again. So I created a new charting platform, and I want to make sure, if I go full screen, I want to make real sure that you can see all that. Is that still all visible?
Yeah.
Okay,
yeah,
great.
So look, you have that rising channel. Looks like it's compressing a little bit.
Right, that was just sort of a default symbol that comes with spiders. But it's dull and boring, and nobody looks at it. But I'm crazy in love with the Dow utilities, and this chart here is almost a half a century of data on the utils. And as you can see with my highlights here, there have been some very interesting turning points. The most recent major one, of course, was prior to the financial crisis, and you just don't get cleaner head and shoulders patterns than that. I mean, that's almost comically perfect. But what I like to see is, I always say that financial instruments have personalities just like people do. You can tend to get acquainted with their behavior and their nature, and the behavior of this one, it occurs to me there's another top here, the behavior of the utils tends to be well-formed tops and firm reversals, and the most recent of which I've been obsessing over tick by tick, has been this right here. Now, admittedly, it isn't as clean a top pattern as the 2008 one, but what makes it well worth watching is a couple of things. One, in the broad context of 50 years of data, we are quite close to the top of this channel, so it's rather expensive. And secondly, as a more intermediate term signal, this trend line, which is anchored to that important March 9, 2009 low, has taken a little bit of damage right here. And my view is that ultimately this year we are going to bust that trend line and stay put below it. And naturally, we have to take out the lows that we had seen here. But my view is that as everybody's focused on FANG stocks, but I think something as banal as the utilities, and this top in particular, is an important harbinger of things to come.
Okay, and is this going to be a precursor for higher long-term, short-term interest rates? Do you feel that there's a strong correlation between, say, the Treasury market and utilities, or?
Right.
Go ahead.
Well, you're a very good straight man, because that's my next thing I could mention. This is the long-term continuous contract on the futures, and as you can see, the recent activity doesn't look remarkably different than the utilities we were just looking at.
Right.
This right here is the same decently formed top, and as you can see, the uptrend is absolutely intact. However, it's vulnerable.
Being threatened.
Yeah, and so a failure.
Okay.
And I'll show you my favorite of all. And this takes so much data. It takes a few moments for it to kind of cobble together all the information. But I'm crazy about this chart. And what it is the S&P cash market divided by the 10-year yield. And I'm just soft shoeing here while it loads, because it's a lot of calculation going on. But what it will eventually show you is a long-term chart of those of that ratio, and what I believe is a calamitously important top. So you and I can talk about other things while we wait for this damn thing to load.
Okay.
So,
okay.
Oh, there we go. It is. And the moment I say go, then it's all right. Anyway, here's that very, very long-term pattern, and as you can see here, this goes back to when Richard Nixon was a beloved president, and all the way up, and
the beginning of the bull market, August 1982.
Precisely. And it's
Okay.
weirdly, I was just a little kid, but I remember the TV news was on.
Don't rub it in.
Well, okay, I wasn't that low. But Walter Cronkite, I think it was their lead story, was talking about how the Dow went up. I think it was like 28 points that day. It was huge news.
Yeah.
That it was up 28 points, and that was
when it broke 1,000 or something.
Well, it wasn't even. It was just the market had been in the doldrums for about
20 years.
Yeah, and it was very big news. And so here we can see the beginning of what has been to this day an uptrend, but the threat here, and interestingly, the peak, because we look around. A lot of people say the peak was like yesterday. The NASDAQ was the highest point in human history yesterday. However, if you look at something broader like this, the peak was actually more like July 2016. And we've been shaping this, for some people terrifying, but to me, exciting pattern, which, should we fail, the neckline here and the concocted figure here is 832.45. Should we fail this, I was bragging about the utilities head and shoulders pattern. This one puts it to shame. This is comically good. So should this fail, then the last 10 years actually might turn out to be worth it. But this is what I'm watching with rapt attention, because this there's not many more months to go before this thing either proves itself or drives a stake into the heart of the last 3 bears on Earth.
Did you ever use the textbook Edwards and McGee?
Oh my Lord!
Technical analysis of stock trends. That was your Bible too.
That's next to King James on my shelf. Yeah.
Okay. All right.
I've got a photograph. It's not handy, but I've got a photograph. It's a real photo of me on my honeymoon, and I am, laying on bed asleep with a sheet over me, and the only clothes I'm wearing is Edwards McGee book on my chest. I mean, that's how I spent part of my honeymoon. So that's very devoted to it.
Okay. So looking at this, potential changes that are happening here, do you follow anything dollar related? Do currencies matter to you at all in your analysis?
They do. I know your listeners are Forex aficionados. I actually in my own charting, the kinds of charts I've got right now are quite simple. They're instruments that your listeners probably wouldn't trade, but they at least give me a bit of a feel for what's going on there.
Okay.
Yeah. So, for example, and I'm always adding new stuff to slope charts, and Forex data is like a week away. But I've got some ETF access here, and so for example, one thing I find interesting is the yen, and of course it's tightly correlated to gold. And so as we look at the yen here, to my way of thinking, we've got this symmetric triangle which failed, and we've spent a few trading sessions trying to undo that damage. But I think that this little bounce is dwarfed by the larger pattern at hand and the fact that this trend line has been broken. So what I would say that based on that is that, okay, the yen's heading lower, and then one could follow, all right, well, gold, and shown here by way of GLD, is in trouble too, which is not great news for gold folks, because they've been suffering for some 7 years now. I mean, this peaked back here in September 2011, and it itself broke a much bigger trend line some months ago. And so even though gold
yours goes, that green trend line goes back to 2004.
Right.
So I know a lot of people were looking at the action from 2015, but you actually anchored it all the way back there, which makes it a 10-year longer trend.
You raise a good point. You raise a good point. Let me just try that, because I don't know what it'll yield. I actually have a feature that draws automatic trend lines here, and I just want to see what this shows. And it's basically obeying whatever the lowest one was. But yeah, if we do that, even that much kinder trend line has been broken. And let me just give that a different color. But yeah, so that's what you just suggested, and that interestingly, even that more forgiving trend line has failed as well. But the point being that I don't trade. I dabbled in Forex some and did a great job blowing up the 2 small accounts that I tried, and said, well, this is a little too leveraged for me. But I do look at Forex daily. Particularly the yen, and here's the much longer term view of gold by way of the continuous contract, and it's kind of a hot mess. Not much to read there, but I think in the months ahead, it's definitely looking kind of grinding lower.
Okay. Anything on oil related shares? There's been some. We have that. Being a bear. Long-term bear, you must have loved 2015, 2016 when crude was trading 25. And what you're thinking here?
Yeah, the famed Dennis Gartman era.
The commodities king.
Right. It never traded above 44 in my lifetime. That whole bottom.
He's still living.
Yeah, and he's still if not, they're doing a good job covering him up.
Maybe it's a cutout they put in.
Yeah. But here is crude for many decades, and it's I love these long-term charts. They're fascinating. In fact, this here in particular is just its own. This, of course, was the first Gulf War, and it's an interesting example of just how backwards markets can appear, because this collapse here was, of course, when the war actually started, and everyone was just ready for it to go exploding higher, because war is bad, but oil actually just completely collapsed. But here we have, over the past 10 years or so, what's clearly a sort of lumbering downtrend, and I'll just draw a lower portion here. I'm more than a little anal about my trend lines, so I got to make sure they're right on the dot.
Oh, you're a technical analyst.
Yes, I am.
All right. You can talk about that. But,
I am indeed.
Some technicians are so anal, they're called technical analysts.
That's me. That's
all right. Well, so what do you think? Is this a major failure up here in crude?
Yeah, what I was watching very closely was this gap right here, and I was looking at that as a reversal point. And I think between friends, we can let me go on that one, because it did exceed that gap a little bit, but it's starting to reverse away. And the key, of course, is this fellow, this trend line right here. Now, shorter term, looking at say USO, in terms of what would that price be? I would say a failure of, and we can throw another line down at this gap
and
here.
Also, I've noticed like crude made a high about 3 months ago and pulled back to 61 and then made a new high. And
Right.
the shares didn't do it. So the shares didn't confirm the recent high in crude. You pay attention to, I was taught that shares lead the underlying commodity price. And if they're lagging, that's kind of a negative message. And if they're leading and show more relative strength, you should look to be buying the underlying commodity.
Oh, interesting. So you're speaking along the lines of, say, XOP or XLE?
Yeah, any of them.
Okay.
Most of them did not, confirm the new high that we had in crude. A lot of things, I think the oil shares have been weaker than the underlying commodity is my point.
Right, right. I was, that's a very interesting point. I was just overlaying the two of them here out of curiosity. But yeah, you can. It's subtle, but you can see that here that the blue presents the XLE, whereas the black represents oil, and you can see here oil, as you just stated, was stronger than the energy shares down there. So that's hadn't occurred to me to look at that. But to kind of put a bow on the answer, I do think crude oil, in half a year from now will be higher or lower. I think it'll be lower, maybe even a lot lower. I think it's headed for failure.
Okay. Can we discuss FANG and
oh my, yeah.
and NASDAQ? I mean, let's talk about what has the most helium in it right now and kind of what you're seeing.
Well, as you mentioned at the start of the program, I'm kind of in the midst of all these folks. We can just thumb through them. So going through FANG, so Facebook, extraordinarily strong. Even, I would short my own mother if she had a ticker symbol, but I probably wouldn't short this. It's just, I don't know how many bears have been slaughtered by this. I don't touch it. Amazon, I was fool enough to, I monkeyed around with this a little bit, and having burned my hand badly, it's like, okay, never mind.
Don't you love those throwovers, Tim?
Oh my Lord!
Where you could trust a wedge line forever and then it blows through it.
Oh sure.
So,
I mean,
this is what I teach. When you're in a throwover phase, you just wait for the throwover to end and it get back inside the channel, and then you have a signal. Is that kind of the way you trade throwovers that make people throw up?
It sounds a sensible approach, and it's funny because you and I have never met, but just by looking at my lines, you and I are kind of having a conversation here. Yeah. Because I'm able to express with a simple line things that would take me a long time to do poorly otherwise. And indeed, like roundabout here, if you and I beamed back in time and we're trading around here, it would seem obvious, in quotes, that we should short the devil out of this thing because it had peaked. Right. And, how far has it gone? It's gone,
20%
more. What is it, $700? I mean, that just shows you how insane that is. So, like right here, Amazon was around $1,100, and it seemed insanely valued, completely crammed against its channel, like, sell your house and buy puts on it. And the thing went up about 65% more in the span of 7 months. I mean, insane isn't strong enough a word. This thing is, and, of course, I never, ever use arithmetic charts, but if you want to do an article in a newspaper, just get dramatic. Of course, you just show that.
Get your get your compass out. Yeah, we were looking at all these parabolic moves here. I have to bring it up because it is a new asset class. Are you watching crypto? What's your view on crypto?
Absolutely. Yeah.
What do you think?
I watch it with great interest. I've never traded a single whatever unit you want to say dollar of it, but I've been completely mesmerized by this because one thing that captivated me about them is that they seem much better behaved technically than equities, because I don't know, there aren't central banks around the entire planet trying to manipulate these things, and so it actually works out. Yeah, it actually works out that they actually obey the laws of supply and demand, like stocks did 15 years ago. Okay. And so with Bitcoin, for example, and I joke about the whole perma-bear thing, but truth to tell, back when Bitcoin looked like this, I had said, I don't understand the stuff. To me, I can't see how it has any value. However, from a chart, this is an incredibly clean bullish setup, and that's when Bitcoin was like at 1,000 and went up to about 20,000. And I was like, oh wow, charts actually work with these things. And since then, you know, as they say, I don't have a dog in this fight. I don't trade this stuff at all. But as a chartist, I find it really fun to chart these things. So with the granddaddy here, Bitcoin, we've got this huge range going on, and most recently we had this cute little inverted head and shoulders, which expressed itself with the rip we saw.
And what a great stop hunt! How they took out the Fed lows and then reversed.
Yeah, well, this, I mean, that's where I'm glad I don't trade it, because down here I was saying, well, you know, trouble ahead, because that there goes that support, and there's nothing beneath it. But it completely defied that. You know, different examples that I include, for example, kind of the number 2 fella, Ethereum, and it itself has been banging within the confines of this triangle. And one lesser known one, which got a lot of press at the beginning of the year, was Ripple. The reason it got so much press is that back here, it was reported that the founder of Ripple was worth more than Mark Zuckerberg, which should kind of tell you how beyond crazy things went. So it peaked at 329, and it's ground down to like 46 cents now.
It's Ripple is also a favorite beverage on Skid Row in Chicago.
Ah, yes, I remember.
Ripple wine. Right?
Yes, two exits, no waiting. Yes. So, yeah, there's poor old Ripple right there. But yeah, I do follow crypto just as a pure interest only.
Yeah, I've never traded it, but I'm thinking at some point it might be smart to own it just because of portability of your net worth on a little thing, a wallet. I interviewed someone that does a lot of Bitcoin, and I said, for guys in my age bracket, was it possible to get a leather-bound wallet to own to hold our Bitcoin?
Something you made at summer camp.
Yeah.
In leather crafting, but yeah, this is in a way I got my own sort of signal on this, because when this was peaking, when all the crypto space was peaking, many folks wrote me, friends and readers alike, saying, you've got to open up a crypto account, this is so great. And there's never been any instrument ever where people have been like falling all over themselves, say, you got to get into this, you got to get into this, it's an honest market, and then of course that I don't hear from them anymore, because things kind of went quiet.
Well, I'll tell you, Tim, I'm so glad that I pursued you, and because I hope you enjoyed your time here, because I certainly enjoyed your looks and your demeanor. Glad to call you my trading warrior brother. The best way for our viewers to follow you is your Twitter handle @SlopeOfHope, and that's also the name of your website and service. And looks like you have a very dynamic community where people share charts, and they post and share their opinions, and a lot of eyeballs working together, which I'm a big believer in.
Right. No, trading is a funny thing, because independently, it's a solitary pursuit. But there are these communities like the one I've built, where we can all kind of gather together and share victories and defeats and ideas. And another thing you find on Slope, of course, is these tens of thousands of charts people have shared, which are neatly categorized. And as I said earlier about the whole Forex thing, there are plenty of currency charts that are in there too. So it's almost all free for the taking. So I encourage your listeners to give it a shot and poke around. I think you'll find some things you like.
Well, good hunting, my bearish friend. And,
well, thank you.
I think there's at least one decent wave to catch here, Tim, into October.
All right.
Well, but
it was a pleasure talking to you, and very kind of you to invite me to your forum. And best of luck to us both. I think we could all use some.
Thanks so much, Tim. I appreciate it. Thank you for coming here and edifying our community. So everyone, thank Tim Knight. You could follow him at Slope of Hope. Go to his website, check out his community as a great resource. This guy's one of the best technicians out there. So with that being said, have a great Wednesday. See everyone tomorrow. Good hunting, and most of all, don't just count your pips, count your blessings. See everyone tomorrow. Thank you again, Tim Knight.
My pleasure. Thank you.